chickens are cheap.
Yes.
As cheap as they've been in 12 years. What does that mean for Tyson in terms of input costs and also pricing?
You know, anytime the grains are stable, it's good for us because then we don't focus so much on price, but the value. So we are focused on innovation at Tyson. If you take a step back, Tyson's purpose is, in our strategy, is to sustainably feed the world. And so anytime we have, favorable input costs, it allows us to accelerate innovation, brand building, marketing, all towards driving towards the protein that people want, which has been a huge tailwind for us at Tyson, and we continue to leverage.
So the extra savings from the input costs going down, will they eventually have to go to wage increases?
Wages have been increasing for the last 3 years. We've been consistently increasing, in some years double digit. So they do. Certainly labor is tightening. There's also a lot of money we're spending on automation. As it's more difficult to find labor, that's one of the things that we have to continue to do, is to take those jobs that are the most difficult, remove them through automation, and then train those team members that can come up the scale and actually work on those machines that we're putting into the plants.
So let's shift focus a little bit. You talk about a shift for your company to more protein. You're looking at maybe acquiring something. Is that in the near future, and is that in the US or is it abroad?
We're constantly on lookout for acquisitions, and we have been acquisitive. We acquired Advanced Pierre Company this past year, and that was a large acquisition for us. And we will be looking both domestically and abroad. I would say that there's a lot of work for us still to do in the US, but anything that is protein specific, got great brands or great capabilities, that's something that we want to add to the portfolio, because we think that we can take those, gain synergies in a lot of cases, whether they're cost synergies or revenue synergies, and make them great for our share owners.
Are there brands out there that have great portfolio full of protein? I can put it that way.
Sure, yeah. There's if you think about protein overall in the US, it's growing, and it's growing more than 3% per year. But globally, it's growing 3%, and it has been for the last 60 years. So in the US, there's a lot of companies that are focused on not just protein, but also making sure that they're combining those proteins with other foods that consumers want. They have to be relevant. Consumers don't have a lot of time these days.
Sure, but are you waiting, for example, for a company to get cheaper? Do you have your eye on specific targets?
There's a lot of companies that would be available, but there's certainly the valuations are really high. So we're going to be disciplined at the same time. We're not so anxious to do an acquisition that we're going to overpay. If we can see a lot of synergy, we absolutely will do that if it's good for the share owner, but not overpay.
Net leverage for yourselves about 2.8 times right now. Comfortable with that figure?
It's going to be going down. By Q3, we estimate it'll be about 2 times, and that's the space we want to be prior to making an acquisition. What we've been able to demonstrate that we can do at Tyson is quickly pay down debt and get back to that 2 times leverage, which, the cash flow generation of our company is fantastic. And so that puts us in a very acquisitive mode, typically.
The White House stance on trade, we were just talking about it a moment ago. It's difficult. What about for a company like you? I know you're more domestically sort of attuned, at least for customers, but you source things abroad and you trade abroad.
We do. So we're a $40 billion food company. We're the U.S.'s largest food company, but 10% of our sales are export. So as it relates to trade, we want it to continue to flow. Certainly NAFTA is very important to us. Canada is our 5th largest trading partner. Mexico is our 3rd. So we'd like to do no harm with NAFTA, modernize those parts that need to be modernized. But as it relates to keeping the trade flowing, we want that to happen. And as well, in terms of Asia, that's very important to us. So yes, we do want that.
You must have modeled out for these not to continue, at least in the form they're in, right? It doesn't look like NAFTA is going to stay as it was, and the TPP doesn't even look like the US is going to be a part of that. What do your models look like in that scenario?
We do modeling, but we have, from our perspective, we think things will continue. It's really hard to politicize food. I think the administration knows that agriculture is central to the U.S.'s competitiveness globally. I mean, there's roughly $300 billion worth of food or exports. And, from the food perspective, the middle U.S. really depends. Agriculture is very important in the Midwest, and I think the administration appreciates that. And so we're hopeful that any of the modeling we do is going to be, consistent with what we've seen for our exports.